All right, ready to dive into something most people probably don't think too much about.
Sounds intriguing. What we got?
IRS forms. But not just any form. We're talking Form 8867, the Paid Preparer's Due Diligence Checklist.
Okay, so the form our tax preparers use, not us directly.
Right. But you know me, always got to dig deeper.
Always curious.
Exactly. So we found this video walking through this form, and I gotta say, it's pretty eye-opening.
Oh, how so?
Well, for starters, it shows just how much scrutiny goes on behind the scenes when you're getting your taxes done.
Yeah, makes sense. They're making sure everything is legit, protecting both the taxpayer and the IRS from fraudulent stuff.
Exactly. It's like your tax preparer becomes an IRS detective, making sure you're not claiming things you shouldn't be.
Definitely a lot of responsibility on their shoulders.
So this Form 8867, what kind of stuff triggers this extra level of investigation?
Well, there are a few common credits that tend to raise red flags for the IRS.
Usual suspects, huh?
You could say that. The Earned Income Tax Credit, the EIC, is a big one.
Ah, the EIC, yeah. Heard that one can be tricky.
It is. It's designed to help low to moderate income working folks, but the qualifications can be pretty complex.
So ripe for misinterpretation or, intentional misuse.
Sadly, yes. That's why the IRS wants to be extra careful with it.
Okay, that makes sense. What other credits are on this watch list?
The Child Tax Credit is another one, including those additional credits for dependents.
Those can really add up, especially for families with multiple kids.
They can, but again, lots of specific rules about who qualifies. The IRS wants to make sure everything is legit.
So EIC, child tax credit, anything else that sends up a red flag.
You might be surprised to hear that even filing as head of household can trigger this extra scrutiny.
Really? Seems pretty straightforward to me.
It can be, but there are specific requirements about providing a home for a qualifying child, and sometimes those get misconstrued.
Ah, so even something that seems basic can have hidden complexities. Fascinating. But you mentioned fraud earlier. What does that actually look like in the context of, getting your taxes done?
Well, imagine this. You walk into your tax preparer's office, ready to hand over your W-2 and call it a day.
Pretty much my usual approach.
But this form, this 8867, it turns your preparer into more than just a number cruncher. They become an investigator, asking you specific questions about your situation.
Like what?
It depends on the credits you're claiming, but it can get pretty detailed. Like for the EIC, they might ask about your living situation, who else contributes to the household, any major life changes during the year.
So it's not just about the numbers on paper, it's about the story behind those numbers.
Exactly. They're trying to connect the dots, make sure everything aligns, and that you truly meet the qualifications for the credits you're claiming.
Okay, starting to see why this due diligence thing is a big deal. But what happens if something doesn't quite add up? Like if there's a discrepancy between what you've told them and the documents you've provided?
That's where the documentation piece comes in. Preparers are required to keep meticulous records of everything.
Everything. Sounds like a lot of paperwork.
It can be. They have to document every question they ask, every answer you give, any discrepancies they find, all of it.
Whoa, so it's like a paper trail for your taxes.
You got it. And they have to keep these records for at least 3 years, just in case the IRS comes knocking.
3 years, that's a long time.
It is, but the IRS has a 3-year statute of limitations for most audits, so they can go back that far to review your return.
Ah, so it's about covering all the bases, just in case.
Exactly. This documentation protects both you and the preparer if any questions come up down the line.
I see, so it's all about being prepared. But let's face it, most people dread the thought of an IRS audit.
Yeah, not exactly a fun experience.
So what kind of things could trigger an audit? Is it random, or are there specific red flags?
There is some randomness to it, but often certain things raise suspicion.
Like what? Spill the secrets?
Well, claiming deductions or credits that are statistically unlikely for someone in your income bracket or profession can be a red flag.
So if I'm claiming a home office deduction, but my income suggests I work a regular 9 to 5.
That might raise an eyebrow, yeah.
Makes sense. Anything else that might pique their interest?
Unusually high charitable contributions compared to your income can also trigger scrutiny.
Ah, so they're looking for patterns that don't quite fit.
Exactly. They have databases that track average giving by income level, so if yours is way out of line.
Red flag city.
Okay.
So it's not just what you claim, but how those claims compare to others in similar situations.
Exactly. And of course, failing to report all your income is a surefire way to attract unwanted attention.
Yeah, that's basic tax 101, right? Make sure you're reporting everything.
Absolutely. The IRS gets copies of your W-2s and 1099s, so they'll know if something's missing.
Good point. Okay, so let's talk about the consequences. If a preparer messes up on this form 8867, what happens?
There are some pretty hefty penalties
So
involved.
it's not just a slap on the wrist.
Nope. The penalty for each failure to properly complete the form is $560
$560 per mistake.
per mistake. And if there are multiple credits involved, those penalties can add up fast.
Wow, that's going to make preparers double-check their work. It sounds like this form puts a lot of pressure on them to get things right.
It absolutely does. And it's not just about avoiding those penalties. Reputable preparers take this very seriously because they understand the importance of protecting their clients.
So it's a balancing act, navigating these complex rules while also making sure their clients are claiming everything they're entitled to.
Exactly. It's a big responsibility, and it requires a deep understanding of the tax code.
Well, I'm starting to see why understanding this form is important, even for those of us who aren't tax pros. It gives you a glimpse into the inner workings of the system.
Definitely. It's all about transparency and accountability.
Okay, so we've talked about the preparer's side of things, but what about us, the taxpayers? Do we need to keep copies of all our tax stuff too?
While the IRS doesn't specifically require it, it's definitely a best practice to hold on to those records.
Okay, so not mandatory, but highly recommended.
Exactly. Think of it this way. What if you get a notice from the IRS a couple years down the line questioning something you claimed?
Oh, that's not a call you want to get.
Nope. But if you have those supporting documents readily available, it can make things so much easier.
So it's all about having that backup, that proof, just in case.
Exactly. It can really help you avoid potential penalties or additional taxes down the road.
Makes sense. But what exactly should we be saving? Is it just our tax returns, or are we talking everything under the sun?
You don't need to keep every piece of paper, but focus on documents that support the info on your tax return.
Like what?
Your W-2s, 1099s, bank statements, receipts for deductible expenses, anything that backs up your income, deductions, and credits.
Right, okay, so a pretty comprehensive list.
Yeah, it's about covering your bases.
But what about for those of us who, live in the digital world? Can we just scan everything and store it electronically?
Absolutely. The IRS accepts digital copies, so feel free to embrace the paperless route.
I knew there was a reason I loved technology.
Just make sure you have a reliable system for organizing and backing up those files.
Solid advice. But what happens if you can't find a document? Are you just out of luck?
Not necessarily. There are often alternative ways to substantiate your claims.
Like what?
Say you can't find a receipt for a charitable donation. Your bank statement showing the transaction might suffice.
Ah, so it's about finding that paper trail, even if it's not the original document.
Exactly. And sometimes you can get a duplicate receipt or statement from the vendor.
So it's about being resourceful and leaving a trail of your efforts.
Precisely. And remember, this meticulous documentation isn't just for potential audits. It can also come in handy if you need to challenge a disallowed credit.
Oh yeah, we touched on that earlier. You mentioned a form for that, right?
Yeah, Form 8862. That's a whole other beast we can explore later.
Okay, I'm intrigued. But the takeaway here is that being organized can make that process a lot smoother.
Absolutely. The more organized you are, the better prepared you'll be to navigate any tax-related hurdles that come your way.
Well, I think we've laid a solid foundation for understanding Form 8867 and why it matters.
Agreed. It's all about transparency, accountability, and making sure everyone is playing by the rules.
But there's one piece of the puzzle we haven't explored in detail yet, that mysterious Form 8862 you mentioned.
Ah, yes, the form for challenging disallowed credits. That's a whole other adventure.
Okay, I'm ready for that adventure. But let's save that for next time.
Sounds good to me. We'll dive into the world of Form 8862 and see what mysteries it holds.
All right, everyone, stay tuned for part 2 of our deep dive, where we'll tackle Form 8862 and all its intricacies.
Can't wait to unpack that one. It's a doozy. See you next time.
See you then. And remember, folks, knowledge is power when it comes to taxes. Stay informed and stay organized. Okay, so last time we dove deep into Form 8867, the one that turns tax preparers into, financial detectives.
Right. All about making sure those credits are claimed correctly, protecting everyone involved.
Exactly. But what happens when, things go sideways? What if a credit you're accounting on gets disallowed? Game over.
Not necessarily. It's not a dead end. There's actually a way to fight back.
Oh. Tell me more. I love a good comeback story.
Well, you can actually appeal that decision using another IRS form, Form 8862.
Another form? Seriously?
Yeah, I know, more paperwork, but this one is specifically for challenging a disallowed credit.
So it's like your chance to say, hey, IRS, hold up, you got this one wrong.
Pretty much. It gives you a platform to explain why you believe you actually do qualify for that credit.
Okay, I'm listening. But let's be real. How often does the IRS actually reverse their decision? It seems like a long shot.
It's not a guarantee, for sure.
Yeah,
The IRS isn't just going to hand over credits without a good reason.
makes sense. So what kind of situations would make it worth filing this Form 8862? When do you actually have a fighting chance?
Well, a common scenario is when your situation has significantly changed since the credit was initially disallowed.
Oh, interesting. So like a life change that impacts your eligibility.
Exactly. Let's say you were denied the earned income credit because you made too much money.
Happens to the best of us. But then
But then, let's say you lost your job or had to take a lower paying position.
that would definitely change your income situation.
Right. And if that lower income now puts you within the EIC guidelines,
Boom. You might be able to claim it retroactively.
exactly. That's when Form 8862 could be your best friend.
Okay, so income shifts. Got it.
Yeah,
What about other life changes? Anything family related come to mind?
absolutely. The child tax credit is a big one that often hinges on family dynamics.
Right. Lots of rules about dependents and who qualifies.
Exactly. So imagine you were denied the child tax credit in the past because you didn't have any qualifying kids living with you.
But then,
But then life happened. Maybe you got married and had a kid or gained custody of a child who now lives with you full time.
those are definitely major life changes.
Right. And if those changes mean you now do meet the requirements for the child tax credit,
You might be able to claim it.
bingo. Form 8862 is how you bring that change to the IRS's attention and make your case.
Okay, this is making more sense now. So it's not just about filling out a form. It's about proving that your life has changed in a way that impacts your eligibility for the credit.
Exactly. But remember, you can't just tell the IRS, oh, things are different now. You need proof.
Right. Documentation is king when it comes to taxes.
Yeah.
So what kind of proof are we talking about here?
It depends on the specific situation, of course, but you'll need to provide solid evidence to back up your claim and show the IRS that their initial decision is no longer valid.
Give us some examples.
Pay stubs to prove your income has decreased, court documents for custody arrangements, adoption paperwork, that kind of thing.
Okay, so it's about painting a clear picture for the IRS, connecting those dots, and leaving no room for doubt.
Exactly. The stronger your evidence, the more compelling your case.
So it's like building a case in court. You need evidence, you need a good argument.
You got it. But even with all that, there's still no guarantee, right? The IRS is going to scrutinize everything.
So even with Form 8862, there's still a chance they could just say no.
There is. But that doesn't mean you shouldn't try. If you have a legitimate change in your circumstances and the documentation to back it up, it's absolutely worth giving it a shot.
And if they still say no,
Well, even then, you're not totally out of options. There's a whole appeals process you can go through.
seriously, like taking the IRS to court.
Well, it can go that far, but usually there are steps before that. You can request a reconsideration by a different agent, try to plead your case again.
So it's a multi-layered process with checks and balances.
Exactly. It's not a quick and easy fix, but there are avenues to explore if you believe you've been wrongly denied a credit.
Okay, that's good to know. But I gotta ask, why does the IRS make it so darn hard to claim these credits in the first place? It's like they're setting up roadblocks for people who actually need help.
It's a tough balance, I'll admit. The IRS is trying to prevent fraud and make sure these valuable tax benefits go to the people who are truly eligible.
I get it. There are always going to be people trying to game the system.
Unfortunately, yes. So these stringent rules are meant to protect the system as a whole, even if they can sometimes feel like a burden.
Makes sense. But let's talk strategy for a second. What are some common mistakes people make when filing this Form 8862? Things that could actually hurt their chances.
One big one is not providing enough documentation. You can't just say your situation has changed, you got to show it.
Right. Back up your story with those receipt statements, whatever you've got.
Exactly. Paint a clear picture for the IRS. Leave no room for interpretation.
What other pitfalls should people watch out for?
Another common mistake is failing to address the specific reasons the IRS gave for denying the credit.
So you got to read that rejection letter carefully.
Yep. Figure out exactly why they said no, and then use your Form 8862 to directly counter those points.
So it's not just about proving your case, it's about addressing their specific concerns, like a rebuttal.
Exactly. You're trying to convince them that their initial assessment was incorrect.
Okay, so strong evidence, targeted rebuttal, anything else?
Don't forget about deadlines. Form 8862 has a strict filing deadline, and if you miss it, you're out of luck.
So procrastination is not your friend here.
Not at all. Get that form filed on time, or you might miss your chance to challenge that disallowed credit.
All right, noted. So navigating Form 8862, it's about being organized, being persuasive, and being timely.
You got it. It takes effort, but it can be worth it if you believe you're entitled to that credit.
Okay, so we've talked about the taxpayer going it alone, but what about tax preparers? Can they help with this Form 8862 stuff?
Absolutely. A good tax preparer can be invaluable in this process.
Like a guide through the IRS jungle.
Exactly. They can help you gather your documents, craft a strong argument, even represent you before the IRS if needed.
So it's like having a pro in your corner, someone who knows the ropes.
Exactly. They can navigate the complexities of the system and increase your chances of success.
Well, I'm feeling a lot more informed about Form 8862 now. It's definitely a tool worth knowing about.
It is. It's a way to fight back when you feel you've been wrongly denied a credit.
All right, so we've covered Form 8867, the due diligence checklist, and now Form 8862, the comeback kit for disallowed credits. What else is there to know about this whole due diligence landscape? Any final words of wisdom to help us survive tax season?
My biggest piece of advice is to embrace the power of knowledge. The more you understand about the tax system, the less intimidating it becomes.
So knowledge is power. Got it.
Right. Don't be afraid to ask questions, do your research, stay informed.
And stay organized. We can't forget about that.
Absolutely. Organization is key to making tax season less stressful and avoiding potential headaches down the road.
Well, I think we've covered a lot of ground today. We've gone from intimidated to informed, and I'm feeling much more confident about tackling my taxes now.
That's great to hear. Remember, tax season doesn't have to be a dreaded experience. With a little preparation and the right knowledge, you can handle it with ease.
Well said. And on that note, we'll wrap up this deep dive into the world of tax due diligence. Thanks for joining us, everyone. Until next time, stay informed, stay organized, and happy filing. All right, so we've explored those forms, 8867 and 8862, and kind of makes you realize how important it is to be on top of your tax game.
Definitely. Being organized is key, especially when it comes to documentation.
Yeah, you've said that a few times now. It's starting to sink in.
Good. Because it really can make all the difference. Think of it this way. You're essentially creating a financial story for the IRS. And those documents, they're your supporting evidence.
Okay, so like building a case for my own taxes.
Exactly. You want a strong narrative, and each document is like a piece of that puzzle.
Right, I'm getting the picture. But where do I even start? Is there a magic system for keeping everything organized?
The good news is there's no one right way. It's all about finding what works best for you. Some people are all about physical files, folders and labels.
Yeah, my parents are like that.
Makes sense. But others, they prefer going digital. Spreadsheets, scanning apps, there are lots of options.
I'm team digital all the way. Less paper clutter?
Whatever works. The key is to choose a method and then stick with it. Consistency is key.
Got it. So assuming I'm going digital, what exactly should I be keeping in my, digital tax library?
Think about the main categories on your tax return. Income, expenses, dependents, and any special situations.
Okay, so for income, that's my W-2, 1099s, anything like that.
Exactly. And if you have any side gigs, keep records of that income too.
Got it. What about expenses?
Receipts for anything you might deduct. Medical bills, charitable donations, work-related expenses, that kind of stuff.
Okay, makes sense. But what about the less obvious stuff? Are there documents people often forget that could be important?
Oh yeah, for sure. Things like childcare receipts, property tax records, student loan interest statements, those can all come in handy.
Wow, it's more than I realized.
It can be. And especially if you're claiming credits for dependents, make sure you have documentation for those relationships.
Like birth certificates or custody agreement.
Exactly. Anything that proves those connections.
Okay, this is a lot to keep track of. But what if, life happens and you lose a receipt or something? Are you just out of luck?
Not always. There are usually other ways to prove those expenses. Bank statements, credit card statements, those can help.
So it's about finding that paper trail even if it's not the original document.
Exactly. And if all else fails, see if the vendor can provide a duplicate receipt. Just make sure you keep a record of your efforts to get it.
Got it. So lots of options, but documentation is key no matter what.
Exactly. And one way to make it less overwhelming is to make documentation a habit, not just a once-a-year scramble.
Okay, so scan stuff as I get it, file it away electronically.
Exactly. Little and often can prevent a huge headache come tax season.
I can get behind that. But what about going back? Way back. Is there ever a reason to keep stuff longer than the usual 3 years?
It's generally a good rule of thumb to keep things for at least 3 years, yeah. But there are certain situations where holding on to them longer might be wise.
Okay, so when in doubt, keep it a little longer. What kind of situations are we talking about?
If you filed an amended return, or if you're involved in any tax disputes, hold on to those records.
Makes sense. Anything else?
And if you've made significant investments, especially in real estate, those records are worth keeping indefinitely.
Okay, so it's like insurance for your financial history.
Exactly. You never know when you might need to refer back to those older records.
All right, good to know. So we've talked about documentation for potential audits and for challenging disallowed credits, but are there any other benefits to being organized with your taxes?
Oh, absolutely. Having a clear picture of your financial life is empowering in so many ways. It helps you budget better, make smarter saving and investment decisions.
So it's not just about keeping the IRS happy, it's about taking control of your own finances.
Exactly. And it can make things like applying for loans or mortgages a lot smoother.
Good point. Lenders always want to see those tax returns.
They do. So having everything organized and readily available can save you a lot of hassle.
This has been eye-opening, I gotta say. We've gone from, like, Form 88667 anxiety to feeling empowered to tackle our taxes.
That's what we like to hear. Remember, knowledge is your best defense when it comes to taxes. Stay informed, stay organized, and don't hesitate to seek guidance if you need it.
Well said. And on that note, we'll wrap up this deep dive into the world of tax due diligence. Thanks for joining us, everyone. Stay informed, stay organized, and happy filing.